My colleague Ajay Sharma, in fact, is right now in conversation with Rashesh Shah, who's the chairman of Edelweiss Group. Good morning, Ajay, and take us through with this big exclusive interview.
So the big transaction happening in the financial services space is reported by my colleague in ET is about insurance broking arm being divested by Edelweiss. Rashesh Shah is joining us right now. He's been a very busy man last couple of months. So many transactions are being executed by Edelweiss Group. We'll talk about this one first on the insurance broking side. Rashesh, good morning. Thanks a lot for speaking with us. Talk to us about this divestiture, because one would really think that insurance is a great place to be right now. There is growth all around. People are talking IPOs. Data is showing that the runway is open and you're exiting and divesting the stake here. Talk to us, what's the strategy behind it?
So as you know, Ajay, Edelweiss, we are a diversified company with almost 10 different businesses. And this insurance broking business is very similar to investment banking, very similar to broking business. And it was earlier part of the wealth management business, which, as you know, we have spun off and we are getting it listed as a standalone business. And because here we had a partnership with Gallagher, they were keen to keep it as a standalone, and increasingly this is becoming a global business. They wanted to increase their stake and we got a good price. So I think we are reallocating capital, but I must remind you, we have two other insurance business. We have a life insurance business and a general insurance business, where collectively we have invested more than 2,500 crores up till now, and we continue to invest in that. So I think part of this is we are reallocating capital from insurance broking, which was a small, very high quality, very niche business. It is there. And since it was part of wealth management, after we spun off wealth management, this became a standalone business. So our board decided if there was a good partner, the business future is very bright, and we can also replow this capital into other growth areas that we have. So we have, after this sale, we still have 8 businesses. We have a housing finance business, NBFC, asset management, mutual fund, ARC, life insurance, general insurance, and wealth management. All these are very good businesses, and we continue to grow in that. As you know, last year our customer assets have grown by 35% in the last 1 year. So as we have restructured and from one company with many divisions, we have now become many standalone separate companies, and each one has a very bright future and can take off on its own.
Right. So very important clarification. This is only the insurance broking business which is being sold off. As a manufacturer, in other life and general, you stay there. You have also done a transaction in the wealth business a couple of months back. Very, PAG, one of the most reputed companies, have come in. Talk to us, how much capital have you raised together now, which is sitting on the books, and how would we be utilizing that? Because earlier you said that it is part of a capital allocation policy being reworked. So money coming from wealth, money coming from here, how is it all being utilized? And out of the bouquet of businesses which you have, what is the status on what kind of growth each of them are having right now?
So the total capital we have raised in these two transactions will be about close to 2,500 crores, 2,500 crore is the capital we would have raised. About half of that, about 1,400 goes into repaying debt. We had some holdco level debt that we had borrowed. We have now decided we're going to reduce the debt. So about 1,400 goes into reducing debt, and the balance goes as increased investments in our asset management business. As you know, our asset management business is growing very fast. We have an alternatives business and a mutual fund business. The collective assets are now close to 85,000 crores in both these businesses. As they are growing fast, we need to make some very tactical investments in that. We are making small investments in our NBFC and housing finance business, the retail part of the credit business that is growing very well, plus our insurance businesses. So this is a reallocation capital. Even after this, we expect we will have about 500, 600 crores of excess capital available that we can invest for future growth. Maybe we can acquire companies, we can do other things. But our board decided that, we need to be very focused and reallocate capital in a very smart way.
Right. Of course, capital allocation strategy is something most managements and most prudent managements are focusing on right now. Sorry. Did I hear the word acquire companies? Does that interest you as well? And if yes, which direction would you take the vehicle out of the 8 companies which you run?
So I think there are a couple of areas where we're seeing a lot of opportunities to make very smart tactical acquisitions. One is in the fintech space. We think the entire credit space is getting, disrupted in a very fast way. And given the NBFC crisis that happened, we think credit, especially SME and housing finance. So there are some good analytics firms. There are some good firms which give you underwriting risk management on retail credit portfolios. So that seems to be a good opportunity where you can make some tactical investments. You can spend 100, 200 crores to really buy some smart capability. Our now focus in growth area is we want to grow the retail credit business, which is SME and home loans. We want to grow our asset management business, and we want to grow the insurance businesses. Even in insurance, in the general insurance, we're seeing some very good tactical opportunities coming up. It's a very fintech driven business. So I think one of the biggest thing would be to buy stakes either which gives us distribution or stakes which gives us technological capabilities. In the future, business growth of Edelweiss, the 2 important things we want to focus on is getting distribution. We can get that by buying a small stake in a small finance bank, and that gives you distribution of the small finance bank for your insurance and asset management products. Or you want to invest in technology. But I think these 2 are going to be very important. As we have become more retail, in the last 2 years, our retail customers have gone from 500,000 to 2.5 million customers. So we are adding now about between 1.2 to 1.5 million retail customers every year. So distribution is very important. Technology is very important for us.
Have you identified any of those banks where you are keen to pick up small stakes, or some of the credit organizations or SMEs, SME related fintech kind of companies, or what stage is the transaction in?
Yeah, there is no development to announce or anything that I can. We constantly talk, we are evaluating, and I think the year 22 is a very important year because, as I said, we have restructured our businesses, we have simplified our organization structure, we have capitalized all our businesses adequately. So now all businesses have enough capital for their growth, plus we have some excess capital at the holding company level. So we will make sure that there is enough capital. Now we have to think about growth. See, Ajay, last 2 years have been about managing liquidity, simplifying the org structure, and making sure there is strong balance sheet.
Let's come back on value unlocking. Who knows better than you? There would be soon another listed company from your house as well. How far is that? Edel Wealth. And talk to us, how's business growing over there because of such a buoyant stock market?
So I think Edelweiss Wealth had a very good year last year. As you know, retail broking and individual investors coming back to the market has been a big thing. As interest rates have come down, investors are looking for advice on how to get some extra yield, how to manage risk very well given all the disruption in the mutual fund industry. So I think our customer assets in Edel Wealth Management last year grew by 25%. The business made a profit of approximately 240 crores in the last year. With the PAG deal, there is a 400 crore of fresh capital has been infused in the business also. And we think we are going through a demerger process because that will allow us to give our Edelweiss shareholders direct equity in the wealth management business. And we think that demerger process is about 12 to 18 months away, depending on NCLT process and all that. So I think we should have Edelweiss Wealth Management listed. The business is growing well, it's very well capitalized. It should, by the end of this year, have an equity base of close to 1800 crore plus. So I think having that level of equity base, having that kind of growth, it seems to be at a very good place. And I think the listing will be good for that business.
Talking to you, I'm tempted to take just one last word on markets. You have seen cycles from the market point of view, from credit point of view, and economy as a whole as well. What stage of the market cycle are we looking at the economy which lies ahead in terms of rebound? Are we euphoric? Are we fairly priced? Your thoughts?
It's always a challenge to make any predictions on the market. Market even after 30 years keeps us surprised, especially in the short term. So I think in the short term anything can happen. Some global announcement by US Fed, some Indian government announcement, some accident happening anywhere in the world could really derail the market. So I think in the short run it's very hard to say where the markets are headed. The next 3 months are actually, and I've felt that they are usually the most unimportant, trying to predict the next 3 months or the next couple of quarters. I think on a long-term basis, India has, there was a corporate profit degrowth for the last 8 years. From 2013 till 2021, corporate profit has constantly degrown for various reasons. The credit slowdown, the NPAs in the banking industry, ILFS crisis, COVID, all of that put together. I think that long-term trend has turned around. And I do think the corporate profit will be on an uptick for the next 4 or 5 years at least. So I think on a 5-year basis, one feels very optimistic about corporate profit growth. I think as we put COVID behind us.
Always very interesting listening to Rashesh Shah. Significant updates coming in for Edelweiss there. We're slipping into a short break, but on the other side, we'll take a lot of the viewer queries that are already piling in. Do stay tuned. Lots more coming up.